Good afternoon, everyone. We are excited to talk about how financial partners can help grow and protect your family legacy. And just a little bit about ourselves. My name is Gamboa. I've been with Tri-City National Bank for 19 years, different roles, but always on the customer-facing side. And I have with me my colleague, Alissa Peeters. She's also on the commercial lending side, and she's been with us for 10 years, so we together have lots of experience. And we, before we jump into our presentation, we wanted to show a little bit of our story, and that's our founder, Dave Ulrich, and his wife, Agatha. Looks like after a long day of work, building his businesses up. And I would think that he would be pretty proud of what the bank's done since then. Built it up to, we're now, close to a $2 billion bank with over $1.8 billion in deposits, all of them local in Southeast Wisconsin. We love to just stick to our neighborhood, this region from the state line, Kenosha, to Ozaukee County and west of Waukesha. That's what we know. That's what we want to keep doing. And in my job, my favorite part is going out and talking to clients, listening to their journey, their obstacles, what they're looking forward to do. And this presentation is kind of like what we would expect a customer call to be like. Talking about all sorts of different things, and one of them is the economy. Whenever you call it to the customer, we're always talking about the economy. This is my view of the economy in 2025. We started this presentation about a month and a half ago. That's just the last couple of months here. So we got lots of ups and downs. So, what does this ride mean for us? Big things happening, big picture for us, and then we're always trying to understand what it means for Wisconsin. First, obviously, tariffs are dominating the headlines. It's cool just to go back to January, and we're saying January 20th, Trump signs America First trade policy. A couple days later, announces tariffs to Mexico, Canada, and China. If you guys can remember that was only back in February. And guess what? No, never mind. We're going to pause tariffs for 30 days. Okay. Then China comes back, says they're announcing tariffs on energy products and agricultural goods. Next, tariffs on aluminum and steel. Next, China's like, 20% on everything. Then March 4th, the tariffs are effective. We know the story now. Paused on automotive tariffs, paused on these things. Tariffs come back, tariffs are this, exemptions for smartphones. I think what we've realized that tariffs are, in some form or another, are going to be with us now. We don't really know the final form. We know that the president is going to try to broker deals with each country. We know there's going to be some sort of hit. We're just trying to understand how that's going to affect us. On the banking side, we're looking at the federal funds rate and how it's getting affected. This is the target interest rate banks like Tri-City would borrow money from, or where we would put our excess deposits in the Fed and gain interest. It also affects, as you as customers would have your borrowing costs. So your lines of credit and anything that's floating is going to be some way connected to the federal funds rate, even if it's SOFR that's mirroring that. Fed Open Market Committee called the Fed. They meet on a regular basis right now. Federal funds rate is at 4.25, 4.50 range. When we started working on this presentation in December, the December meeting, the probability was to a 75 basis point drop from now until then. That's now changed in the last 30 days to most likely being a 50 basis point drop. So what we're seeing is, even from last year, when are rates dropping? When are rates falling down? You know, how fast are they going to fall down? As we go through this economy and this tariff business, what we're seeing is that rates are seeming to hold steady, still thinking that it's going to come down, but not as fast as we thought. So, you know, again, if you look back and look at where probabilities were and where rates actually moved, they don't really match up. What it is this is the best guess right now, and then this best guess keeps moving along as things happen. Large events in our economy can always move that. Next up is this updated crystal ball. It'd be interesting to see 6 months from now what this looks like. But as you can see, 2024, quarter 3, quarter 4, GDP was solid in this economy. It was above 3% in quarter 3. You can see where government spending was. Everyone knows kind of where inflation has been. It was on its way coming down. We know Fed funds rate was 5% and had already dropped. We can see where the long-term notes were, 10-year notes correlating with mortgage rates. We already know quarter 1 numbers, roughly, they're starting to come in. We contracted in the economy. We had negative GDP growth quarter 1. Unemployment stayed roughly the same. We can see all the inflation indicators roughly the same, but because of tariffs, the thought is that the economy will feel the pain this year in 25. So we're going to see an uptick in inflation for this year. That'll certainly be subject to change, but that's where the forecasts are from our advisors that we meet with and when the bank's doing our planning. And then you can see the 450 top of the range of the Fed rate going down to that 375. SOFR coming down. So still a thought that rates come down, but that's the direction that we're headed.
Yeah, so we've talked about where we are on the national scale, the roller coaster that we're on, but what does that mean for our local market? Historically, the Midwest, as well as Wisconsin in particular, have been pretty insulated from a lot of that volatility. You see here, unemployment rates have consistently fallen below US for Wisconsin. We've also seen consistent GDP growth, aside from an anomaly of COVID, but consistent GDP growth across the state. BizTimes does a really nice job of keeping a pulse on the local market. Per this article, our labor force participation is also higher than the national average, and despite an addition of thousands of private sector jobs, unemployment rates have stayed low. There is, of course, uncertainty within the market leading to pessimism for 2025, as we've discussed. However, kind of interesting among smaller companies with less than 100 employees, that is less so. So I think, again, we're seeing some of that insulation with the smaller companies here in Wisconsin. Imports and exports have been up for Q1 in Wisconsin. However, we do think a lot of those increased imports are companies stocking up in anticipation of future tariffs. Now we're going to turn it over and take a little look at commercial real estate. That's what we know and do well, so we're going to turn it back to Ivan.
So yeah, Tri-State loves real estate deals, whether it's for a business or for an investor. We like to feel like we have a really good pulse on what's going on. And I think we certainly have been affected by everything in the economy and real estate. So on the industrial side, this is some CoStar data. I like this chart because the dashed line to the left is actual, the other side forecasted. What we've seen in industrial is that there's been a lot of healthy activity over the past years, going back to 2019. A lot of good positive net absorption, meaning more new leases than vacated leases. Net deliveries have been positive. Vacancy rates have been low, very low. Vacancy rates in industrial way lower than the national average. Again, the Midwest and Wisconsin has always been pretty conservative in real estate supply. We're not building too much spec. But you see at the end of 24, something's changing. We're seeing now like five straight quarters of negative net absorption in the industrial market. Really seeing some softness in different sub-markets that's outweighing any positives in other markets. We're seeing net deliveries slow down, vacancies start to tick up. Where that's going, I don't know, but it's certainly something to watch for, something that we want to pay attention to, and we'll see more information about that. Let's switch over to office. Same graph, actual to the left, forecasted to the right. Office, the green line is vacancy. You can see it steadily just keep going up, tick, tick, tick up. We're seeing the net absorption, really significant net absorption quarter over quarter. It's not looking good for office, but there's definitely some bright spots in there and certainly opportunities. Yeah, that's just, you can see again, lots of vacating leases. So, I mean, overall, some positive, some negative absorption quarter over quarter. Some of the submarkets have more vacancy than others. 19% vacancy in Milwaukee downtown. At suburban office also, certain spots are not looking too hot. Industrial, like Milwaukee market had negative absorption. Kenosha finally hit positive. If you notice, along the 94, they built a lot of large spec buildings many years, or a couple years ago. Slow to lease up. They're finally starting to lease up. Racine County had 620,000 square feet of negative absorption, really due to one, I believe it was DHL vacating their space, 432,000 square feet. Again, vacancy rates starting to tick up, but they're still, right now, 4 million square feet under construction in the Pike County area. We're gonna keep watching. Just some quick retail hits then too. Retail, has been some great opportunities. We've done some great retail deals. I feel like people that understand the market, where there's some retail vacancies that pop up, but they're great locations, great corners, and you can turn them around. There was a huge negative net deliveries. From what we understand from CoStar, that's the Boston store is getting demolished and basically taken off the market. So a lot of these vacant stores that were available, they clear them out. That's a negative net delivery, and then that pushes the vacancy rate down. What the true vacancy rate, is not sure, but we'll see. Obviously, limited potential on where it is. I'm actually on the Greendale Plan Commission, and we have a meeting tonight. I'm here instead of the Plan Commission, but tonight is the meeting where Barrett is presenting their plan for the Boston store. So I think they're going to propose like 500 units on the old Boston store site. So things like that continue. And last slide on commercial real estate. What does this mean for you? Very little new office construction is going to happen unless it's a build-to-suit where an owner wants a new office. You can get it built if the company can underwrite it, or have a very long lease application for the developer. Otherwise, the developer's not going to want to do anything spec. If you're in the market for an office building, I think there's probably some great opportunities for you to buy a nice office building. If anyone's looking for an office building, they can call me up. We'll connect you with some opportunities. And then again, we're seeing signs of industrial slowing down a bit. There's exceptions to everything, right? Waukesha, we continue to see just this really strong industrial market, very low vacancy, but in other pockets of this market, it's definitely 100% that there's slowdowns going. So differences in these sub-markets. And then construction costs had been leveling off in recent years. Tariff uncertainties, especially if you're talking about lumber, specifically plywood, and/or now steel. If you have those mixes, you're going to see some increased prices in those categories. But overall, the construction market's been pretty steady.
Okay, so what tools does your financial institution have to support you? Well, one, they should certainly have this market data available that they can get to you if you're looking to better understand the market segment. Also, your bank should know your business, help protect your business, and care about the future of your business. So we talked about local a lot. Why does it matter if your bank is local? To us, there's a big difference between reading those reports that we show on the screen and really understanding the market. We think the data points are really backing up what we're already seeing happening with our customers. Also, it's not what you know, but it is who you know. Our job is to know the people that we're doing business with. One example is a small business owner that I've worked with for a number of years. She's done stuff in the past. She's worked with attorneys. She's worked with GCs, but she's never really found a good fit. So when her next project came around, I was able to connect her with people I had worked with before and people who I trusted and form a real team that works together collaboratively to get things done. We should also be able to help by connecting you with other funding sources. I think gave a great example. We're really invested in the community. So if you're talking SBA, Milwaukee Economic Development Corporation, or even at the municipality level, they have many funding sources available as well. I'm on the Allis Revolving Loan Fund. We should be connected with these things and know the ins and outs of the various programs to help you put your capital stack together. Okay, and then the personal relationship. It is crucial that we know and understand your business. Again, the numbers are not going to tell the full picture, especially for making a lending decision. We can see the trends, we can see the margins, but why are those happening? Give us the story and know where you're going, and that can help us make a more informed lending decision that goes beyond the numbers. And for you, it's imperative that you know who to call when things don't go as planned. We call that the white glove service. You should have a lender you can call. You should know your customer service reps, your tellers, your treasury management team. I mean, they should be out there, boots on the ground, willing to help you, maybe in your office, kind of helping you through all of those scenarios that come up. Speaking of when things don't go as planned, I'm going to turn it back over to Ivan to talk a little bit about the fraud that we're seeing these days.
So last year we gave a whole presentation on fraud. We think it's important enough just to slide in there, and when we're talking to our customers, we're just reminding them about what's going on, what's happening out there. The fraudsters were going wild when the COVID happened and the PPP money dried up. They're like, all right, what's our next victim? Business owners. So, bank impersonations where someone's trying to pretend they're the bank, mail theft, email compromise are still the biggest things that everyone has to worry about. Bank impersonations. You are a customer of Tri-City and you get a text message like that, hey, click on this and make sure that you're safe. Well, they're actually trying to figure out your credentials, your online credentials, and get on your online platform and transfer your money somewhere else. And it happens on a constant basis. We're dealing with it on, luckily a lot of folks are getting smart to it, but all it takes is someone on your team that is just the weakest link that falls for it. So you have to be vigilant. have to be on top of it. There's 450,000 of these blue mailboxes in the United States. There's apartment mailboxes all over the place. There's a little key that opens all of them. And you can buy it on the black market. You know what the going rate is? It's about $4,000. So people, either a post office worker will sell it to somebody in the black market, or they do an armed robbery and they steal the key and they take it. And we've seen that they're targeting mailboxes for checks. They're trying to figure out, there's different things that they can do with the checks. They can alter the check and deposit it. They can just get the bank information on there and start making counterfeit checks. Or they can take those checks and sell them out to the open market. If your business is still writing checks, there's just different things you do. I would avoid mailing any business checks if you can. I would just, not do it. So we have an email compromise that has been around for a long time. They try to take either two things: try to get actually into your email and then start directing people to do stuff, transfer things, move stuff, or they just spoof your account. They pretend you're you making an email account that looks like your email and start emailing people and direct them to do stuff. This was very popular many years ago. I think the other ones took over as the number one thing, but this is still happening. So, yeah. So, there's lots of things that you can do. Obviously, having procedures in place at your businesses for your employees is one thing. Just when you're interacting with the bank, make sure you have good procedures for your online banking and you're checking it on a regular basis. The more often you check it, the less likely you have some recourse when something happens. Obviously, ACH is a great way to send money now as opposed to mailing checks. Remote deposit capture just keeps your employees in the office, and you're able to scan checks and deposit them without having to leave the office. Positive pay, we see a lot of people add positive pay after they've been victims of check fraud, but maybe you should just have it before you're a victim of check fraud. So positive pay is just where whenever you write a check, you enter it, you log it into your online banking system, and that the checks will only be cashed on your account if they're on that list. So if they're not on that list, they're not getting cashed. And it really controls what's coming out of your account if you're doing positive pay. And then your banking relationship is important too, because when something looks awry or looks different, if you have a good relationship, that's definitely somewhere where we can spot some things going on. So, and we've definitely seen things, whether it's someone's taken over an email account and we're getting some funny message, and we call you up, hey, was that really you? Why are you sending me this? And so a good solid banking relationship will help prevent that.
Yeah, more on relationships. So why is it so important that your banker have a vested interest in your company? Okay, so that's a really dirty kitchen. Think of it like an Airbnb. When you visit a place, you don't take care of it as well as you do if you own it, or if it's your house. If it's your home, you would treat it with care. Well, Milwaukee is our home. We work here, we live here, we'll be here for decades to come. We want to do what's best for the market, and this came up earlier, leave it better than we found it. Now, not everyone will bank with Tri-City National Bank, but we hope that you do bank with a community bank that's providing you the same level of service that we're describing today. Community banks are really a powerhouse in the U.S. economy. We don't want you to confuse being local with being small. We have access to the data that all the big banks do. We have access to technology, all of that, but just with more personal touch. And actually, collectively, community banks are larger than the US's biggest bank, Chase Bank. We really think our logo says it best. As you see, there's 3 arrows coming in, and those are in the form of various deposits and income coming into the bank that we in turn redistribute out into the community in forms of personal loans, business loans, and donations to local nonprofits and causes that are important to us. So, to summarize, the tools that your bank should have to offer you are marketplace knowledge, personal relationship, help you with fraud and security, fraud prevention and security, and they should really have a vested interest in your company in order to help you protect your family legacy and help you grow.
Thank you very much. We will be around if anyone has any questions.
Has any questions for the group? We'll be around here.
What's your favorite project that you've seen in 2025 in Milwaukee?
Say that again.
What's your favorite commercial real estate project, whether Tri-City did it or not, just in the market?
I'm just always encouraged by how resilient I think our real estate market is and how we keep moving things forward. I like seeing our downtown prosper. So I love seeing the Barrett Center open up, and I love seeing new things pop up. So I think it's just better for everyone.
I'll say, because it's top of mind and right here, and I drive past the big pit of dirt every day, I think it's really cool to see how we consistently adapt and reuse old space that's no longer serving the purpose that is best for the community, and finding a new way to evolve it to what'll best serve us. I don't actually. I think office. I think. That's all right.
Next door, the Schwab office moving in.
No, like dirt at the end of the...
Boston store.
Oh.
Right there.
That's exciting. That's our local developer buying the Boston store to change it to a retail mixed-use center, which seems to be a popular format right now, where you're mixing in apartments, ground floor retail, and walkable space. Should do well. Well, thank you very much, and we'll be around. Thank you for attending.